Well, Matt, we've done a number of exciting things here over the past few months at Crystal View, including in Fund 3. So, would you be able to share some things that have been happening here at Crystal View?
Yeah, I'd be happy to, Ben. As you know, we're gearing up to make a pretty sizable distribution through some cash out refinances by the end of the month, which we're very excited about. In total, we're looking at close to $20 million, about 19.5 million, as a result of these cash out refis that our team has been successful in adding value to. And they've all, with the exception of one, been storage assets. So it's nice to see the resiliency in that asset class. It's also great to see the ability in the credit markets to lock in debt for long-term fixed rate at interest only, which is going to continue to juice cash on cash returns.
Yeah. So, how many assets is this, and why are we doing this now? Maybe you could speak to some of that.
Yeah, so six assets in total, um, five being storage, one being MH. And the reason we're doing them now is we've stabilized these investments. So, as you know, our idea, business plan, and philosophy at Crystal View is to buy an asset that's underperforming, non performing in some way, shape, or form, mostly principally from mom and pop owner operators that have operational inefficiencies. Our team steps in, we engineer a value add business plan that could be bringing rents to a market level. We could pass through utilities, enhance curb appeal at these properties, invest CapEx. The idea is to really drive net operating income by increasing revenue, cutting costs. And then once we feel those investments are stabilized, we typically go back to the credit markets and we lock in that long-term fixed rate debt, which is really going to make attractive loan to value ratios on our debt. So that's why we chose to do them now. They were at the life cycle where it was appropriate to lock in that long-term fixed rate debt.
Yeah. And so, could you speak to maybe the future of some of these properties? Obviously, we haven't sold these, we've refied them, but what happens now with some of these?
So what happens now is obviously a very large distribution. We've done our job. We've increased valuations quite nicely across this portfolio, this subset of assets. And we're going to make that distribution, and we're basically going to continue to add value where we can and generate very nice free cash flow returns from that existing portfolio.